But go ahead with your
Well,
question.
I would like to learn the best way of understanding these contracts, these options, so that I haven't traded an option yet. I just don't. What I'm saying is, I haven't pulled the trigger on trying to do an option because I don't understand how to do it.
What are you using Robinhood?
I am.
Okay. When you look at like let's just use QQQ for example. When you are looking at the charts and you see my screen, correct?
Yeah,
Okay. When you are looking at the charts, do you understand what it is that you're looking at?
I understand that there's the wait a minute. The candles are the green and red. The
Right.
lines on the candles, what they call the wicks, are the purchasers or the sellers. If it's going down at the bottom of the candle, you have a bull. Uh, wait a minute. You have a bear market, and when you have the green candle or the green wick, you got a bull market going up. And if
Not
you have
quite.
a
Not quite. So let me just stop you there so we can clear that up because I don't want you to think that real quick. The wicks. So this candle, this is the candle. This is
right,
the price has moved up or down. That's all. Not left to right, just up and down.
right, or correct,
Now, the whole length of this candle represents where the price went throughout the duration of the last week because we're on the weekly time frame. So there are two things we're looking at. We're looking at a body and the wicks. Those are two different components of the candle. The candle is one thing, the body is within the candle, and then the wicks are their own separate things.
right, correct.
Right. So now the candle went as high as this, 627, and as low as this, which is like 616. That's important because we want to know the full length of the candle, the full breadth of the candle. This is the full length of the candle, the high and the low, the absolute high and the absolute low. That's the wick, also known as shadows. Now, the body, where it's colored in at, is the open and close. That determines the color. If the price opened here and closed above where it opened, it's green. If the price opened here and closed below where it opened, it's red.
Oh, okay. So the indicator of green and red means which way the market was on the opening.
Yes. Yeah.
So let's look at the big red in the center, the red one. The market opened at the bottom.
It
No,
opened.
it opened at the top
Yeah.
and it moved to the bottom.
Right. So it's red. It went down.
Okay. Okay, so see that was part of my misunderstanding in when I was looking at these folks on these YouTube videos, and that's why you got to have somebody that's knowledgeable and that you can communicate with because even texting, that's why I like verbal communication because now I hear the inflection, I hear the energy, the emotion. In texting, I leave it unto my own understanding. So if I read it incorrectly, then it's going to be incorrect. Like I was reading that whether it's red or green, the opening was at the bottom of the candle and the closing was at the top.
Mm.
But it depends on where it opened at.
I know it takes some under like your brain gotta kind of swallow it. It's gonna be cool because it happened to me. So this opened here, closed here. This
Got
opened
you.
here, closed here.
Okay, so my then I shouldn't be looking when I want to see what the market did. I don't look at the one on the left. I look at the center one at the 9 o'clock hour, 9:30 hour, and what's going to happen to the next candle to the right.
Good question. Well, it's good to know what the story, what each candle is telling in and of itself, and then from there, kind of get the context, right? Because, say for instance, I am. Let's do month. Let's see. All right. Now you can see this is clearly an uptrend. This is clearly bullish. This is clearly going up. Now let's just pick a place to start. Let's just pick right here. The candle is green because it closed above where it opened. It went up. The candle appears on the screen at the open. Now it can turn green or red. That's where the high and low kind of comes in. Like the candle can go all the way up high and the wick will let us know how far it went. But the wick is simply the high. We open here. This is when the thing appeared on the screen
Got you.
and we closed above where we open, so we're green. The
Okay.
next candle appears on the screen. It opened, and this one's so small. This is such a small price action. The price didn't move a lot. You understand what this candle is telling you? I didn't move a lot. I just went a little bit above where I opened, but I still went up. I still went up. That's why I'm green. But I only moved up a bit. And you can see in comparison to the one before and the one after it, this moved quite a bit. A price kind of it was riding a larger wave. It went as high as that wick went. It went as low as that bottom wick went. But when it appeared on the screen, this was the open, and when it closed, it was here at the top. Same here. It opened here, closed here, open here, closed here, open here, closed below, went as low as the wick tells us, but it closed here, and so on and so forth. And a series of candles that close above where they open indicates an uptrend.
Okay.
And so again, a series of candles. Now, nothing goes up forever. We have pullbacks and continue on our uptrend, so on and so forth. So, and here's the wick here, right? That's where all those other chart patterns come in at, because, and what is this wick telling us? This candle is telling us the previous candle was a bearish candle. It closed below where it opened, right?
Correct.
The next candle after that opened here at the top. Opened here at this bottom, went as low. That means it wanted to be another bearish candle so bad, like the one before it. But the buyers stepped in and pushed the price up.
Okay.
This is a signal that the selling pressure has reversed, and there is enough buyers to overcome the selling pressure to bring the price back up and then continue up.
Okay. So each one of those candles is a time frame, 15 minutes or 1 minute or whatever you set it at.
This one is 1 month. These are month. This is a month. And this is why this is important. When you zoom out, you can see what's happening over time. If you zoom out and you choose to trade in a choppy area, if you choose to take trades, now this is on the monthly time frame. So this is May. Every candle is a month. May, June, July, August, September, October, November, right? So this is happening from May until March of 2023. So from May of 2022 all the way to March of 2023, the price bounced from here to here, just in this visual range. I mean, I'm pretty sure subjectively it could be different for each person, but for me, I can see that we were up, down, then we started moving sideways. So this sideways portion here is a range, and I'm going to mark, so I see the range here. That's 330 down to 256. So now if I understand that I am in a range, I know where the top and bottom of that range is going into a trade.
Okay.
So you want to zoom out to see the larger story. And for example, if we look back, so say we're back testing, right? So that is also an important strategy. Make sure you're going back and rereading the story of the charts so you can understand what's happening. So you look here, January 2022, we topped off at 394. We started our descent down and we started ranging. Then we started to come up around April 2023, and people start saying, okay, the last time we was this high was January 2022. And so as people are planning their trades, they're saying, am I going to take a trade at the height of the last candle, or am I going to wait to test this area, wait for a pullback, and then ride it up after it has confirmed that it is strong enough to hold? You don't want to just take a trade just because you can take a trade. You want to be thoughtful about your levels of resistance, price resisting forward movement, pull back, go sideways. We recover the same area of previous resistance and we blow through it all the way up to 637.
Okay.
And if you squeeze it in closer, you can see the top. You can see that. You can see we were all the way back here. We're gradually up, gradually up, gradually up. Boom. We hit this 406 level and dropped down all the way to 253 over the course of months, right? And then We come back up to test it. Now we could have did a double bottom, but we didn't. We did a continuation. We tested the level of, again. We tested this level of resistance or a ceiling again over here. We did it the first time here. We couldn't hold. We dropped down. We worked our way back up to retest it. Tested it again. We passed that test and we continued on to the upside. But you wouldn't have even known that this level meant anything had you not back tested. You would just be going in blind.
Mm.
You get it?
Yeah. I understand about the testing, and I understand about that because you explained it to me like nobody else could. So
So,
would you say that's technical trading, right?
I mean, that's what they call it. Verbalizing what you're seeing, so you're connecting with it. You're not. I'm not saying be emotional about it, but I'm saying like understand what it is that you're doing.
Right.
Like don't just do anything. Like understand the chart, understand that the wick is telling you the price went all the way up here. And if the wick is super far away from where the candle actually closed, if that top wick is far away from where the candle actually closed, okay, why didn't it close where it went? Like why couldn't we agree on price? Okay, let me show you an example. This candle right here has a little wick here and a decent wick here.
Okay, I see it. I see it. I see the shadow, the tiny shadow
Yes,
right there. Okay, I got
the
you.
tiny shadow. The
I
tiny
got you.
shadow. This is saying, okay, the sellers and the buyers agreed on the price because the wick is small. There's not a lot of disagreement here,
Mm,
right?
yes.
So this is a conversation. You like, hold up, wait. The price went all the way down here. Why y'all didn't stay down here? That's letting me know that I need to pay attention here. Now, when you're back testing, you see the patterns unfold, so you can kind of fill in the story for yourself and start to understand what to look for. Different types of hammers, inverted hammers. Okay, well, this hammer's at the end of an uptrend. This hammer's at the down. Like that's when all that stuff starts to make sense. But if you don't know how the candle is formed, you lost already
Mm, mm-hmm.
because you don't know where you marching. When did you get in the field? That's at the open. The close is when you left the field. You open here, close here, open here, close here, open here, close here. They open here, close here. When it's low is here, but the buyers pushed it up, open here, close here, open here, close here. When it's high is here, when it's low is here, but ultimately closed here. Open here, close here, open here, close here, open here, close here. And just do that a couple of times so you can start to see, okay, I'm understanding the candle formation and the candle anatomy.
Got you.
Yeah. But I hope that helped.
That helped me on them candles. That helped me on them candles.